What's up, gang? Back at it with another video today. I'm gonna tell you guys how I use the Fibonacci tool. So as you can see, my mid zone is gone. It is gone because it was kind of cluttering my screen, and I'm kind of going back to like one of the very first strategies I've ever done that made me the most money when I first started trading. So today I'm gonna implement the Fibonacci. So I still have the major zones. Major zones right now on this market, what is Nasdaq, is the 25,000 and the 26,000. That's the range in between right now. Now we're waiting to see if it's going to break 26,000 today or tomorrow. If it do, then the next level we will have will be 27,000. So now we're not really focusing on that right now, but let's get into this Fibonacci. So let's get into these charts, man. So like I said, I'm between 25,000 and 26,000. Since I'm a technical trader, I like to have my fib through a price range. I like to have myself on numbers. I like everything precise. You know me, I keep everything precise. I don't think that those numbers are on that line. On the Fibonacci for no reason. So me, when I come to the charts, I'm gonna get the Fibonacci. Boom. Top 26,000, 25,000. Boom. All right, boom. So these levels, right? These lines, the blue, the green, and all that, blah, blah, blah. Bruh, those lines is basically the retracement through this price range, in my opinion. But it's not as easy to trade because you don't just want to see, oh yeah, it hit this level and it's dropping, and you just get in. Nah, you have to have other confirmations to get in other than this. Like me, I use chart patterns and I use support resistance, breaking retest. It's a lot of things that I use, but it's a you know good tool to use if you don't want to like chart as much. Cause I don't really like my screen to be like heavily charted like buku lines and boxes. That's why I took the mid zone out. As you can see, the 0.5 is still 25,500. So it's still marked up. I just don't have a box around it. And as you can see, it tap here on this fib level on the 2500, dropped down, went up to this fib level from the 25,000 to the 38.2. So like it's a lot. Like it's cool. Like see right here, it made a head and shoulders off of the 786 level. But you have to see it. Like you have to see in your own eye. Like I wouldn't enter on the 4 hour. Like I'll enter maybe in like the 15 out of 5. But it's better to see these patterns in the bigger time frame so you have a bigger profit gain and a bigger profit margin. And also if you see it in a smaller time frame, you still can make money, but it wouldn't be as profitable as it would be on a 4 hour or 2 hours, something like that. So, it's levels. Like some traders look for 20, 30 pips a day, 40 pips a day. Some look for 50, 60, 100. Some people look for I look for like 100, 200, 300 points a day when I trade, because it happens every day, don't get me wrong, but it's not good to trade every day. You want to have time to sit and think, because you don't want to be greedy. Like Tuesday and Thursday is really the main days that you could really make money and be cool, really and truly. Like Wednesday is cool, Friday is cool, but Tuesdays and Thursdays, money. Oh yeah, this is the head and shoulders on the 786. Boom, tap right here. Went above, came back, tap. Could have sold. What time it was? 9 o'clock on Tuesday last week. Could have sold right here. Boom, profit. Could have got out at 618. From 786 to 618. It is a good 160 point range. 170, something like that. Boom, you good. You good. That's a great trade. And you can get out. Or you could just hold it. But it's the next day. If you trading prop firms, you probably ain't gonna hold it on a Wednesday. But you'll be out before that. But you know what I'm saying? Like came to the 5 right here. Boom. Bursted up. Like you could wait until it start bursting up before you get in. You don't have to get a snipe. Like me, I like sniper entries, but you don't have to wait for it because it's kind of risky. Sometimes you could mess up. Like today I actually messed up on a trade today, not paying attention. So today I got the W back on YM, so we ain't tripping. But today, this morning, I thought that it was gonna drop from the price of 750. I didn't expect Nasdaq to just burst back up and fill the whole candle and continue some more. So I did take a L today from this level. But when I did put the fib on afterwards and seeing that it never touched neither level, and then they had this doji on the 4 hour implement that it was nobody going down, no more sellers, and it went up from the 700 price range. So it went up from 700. It went up from 700 and flew up to 971 is where it's at right now. But like I said, I wasn't really paying attention. You know, I just wanted to make some bread, and obviously I could see a double bottom, a W. It's not all the way downhill, but it's still technically a double bottom, a break and retest, or whatever you want to call it. So yeah, that's how I use the fib. And I use it on all levels. Like say I go to YM, this is already charted over here. Boom, so I hit on YM today. Hit on YM. Right on this candle right here on the flip. I knew it was gonna flip because this 8 hour candle flip. So if one candle flip and then go bullish, and then one candle look like it's going down. See, in my head, if I'm expecting the market to be bullish, I'm gonna buy into the market at certain levels. Cause once it would have came down here, and once it came right up back above the 500, I'm getting in, holding. I probably hold to the 618. See, it's still going. Could have held, been up 200 points. And if I would have called it down here around the 236 or the 250, bruh, I could have been up some like 500 points easy. But hey, I took a loss on Nasdaq earlier because I wasn't really paying attention to Dow Jones. I was paying just to Nasdaq because I'm trying to help one of my students get past eval. So I'm trying to teach them, and one of my one-on-one students. But yeah, that's how I do it. Like this is a fire double bottom W. In fact, I could say it is a double bottom because it did reject off this 650. Then went up. See, boom, one touch. That's a one tap, two taps, three taps. See, I wasn't paying. See, what happened when you don't pay attention. Three taps to the 650. They already touched the 618. So we really wasn't worried about that because they already tapped 618 over here twice. Boom, boom. That's one tap. That's two taps. Three taps. Double bottom. Double bottom. Going up. Going crazy. The three taps. That's like a for sure signal that something about to go somewhere. If it's rejected 3 times. It could do it more times. Don't get me wrong. But 3 times. Like a triple top or a triple bottom. Bruh. Money. Bruh. But it's really a double bottom. But it did tap it 3 times. But, still it's a W. We love W's. We love M's and we love W's. And we love head and shoulders. And we love inverse head and shoulders. And that's all we gonna do. We ain't doing nothing else. We keeping it simple. We keeping it plain. And that's all I got for y'all, man. I hope y'all stay blessed. I hope y'all stay up. Thank God for this talent. Thank God for this wisdom. Thank God for helping me help you to learn this stuff.